All right, Bulls and Bears. I hope everybody is doing well. It is Friday. It's June 14th, 2024, coming up on a Father's Day weekend. So happy early Father's Day to all the fathers out there. And hopefully you're a good father. Hopefully you actually see your kids and interact with your kids. Either way, happy Father's Day. And I hope everyone's well. I may not get a video out this weekend just due to Father's Day and doing some family stuff. So I'm going to try to make this a little bit longer of a video, a little bit longer than usual, because I want to get in a lot of news that I normally would have put out tomorrow and Sunday. And who knows, if I have time, maybe tomorrow I'll put out a video. But just to be safe, I'm going to get a lot of information packed into this video. So today, stocks were mixed. Now, there have been some people again saying I've been predicting a stock market crash. No, let me repeat this because some people, I don't think they actually watch the videos, or they don't listen to the videos. They may read the headline and they say, "Oh, this guy's a bear," or "He's bearish. He says there's going to be a crash." No, I said there can be a crash, but it's very unlikely. What's going to have to happen? It's going to have to be a big catastrophic situation, kind of like a 2020, kind of like an act of war, something like 2001. Banks have to be allowed, and I use the word allowed because it's completely optional if the banks fail or not. It's completely controlled, it's manipulated, right? All they have to do is, again, print money, create enough money to keep the banks propped up, or allow one bank to buy out another bank. And that contains the situation. It's not going to happen like it did in 2008. I don't think the powers that be are going to let another 2008 unfold, right? If it does unfold similar to 2008, it has to be something big, something catastrophic to cause this, like a worldwide panic type of situation. Again, like 2020, a global shutdown, right? Something on that scale, World War III. And many people are saying that World War III is just a matter of time. And some people have said and are saying that World War III has already started. We just haven't felt the impacts here in the United States, right? So a lot of stuff to digest, a lot of information to try to make sense out of, right? There's no right or wrong answers. Nobody knows exactly what's going to unfold, what's going to happen. The best thing to do is just be prepared for any situation. Maybe inflation will continue to skyrocket. Again, they continue to throw helicopter money at the situation. If that's the case, you're going to see inflation go off the scale. And that's okay because we are braced, we are position for that to happen. If you have investments, I'm still holding stocks. I haven't sold all my stocks. So I'll see the stock market go up. I'll make some money off of that. Silver, if silver and gold continues to go up, we'll make money off that. I know probably most of you are watching after watching this channel for years. You probably have some gold and especially silver in your portfolio, right? So either way, we're going to be fine. If we see deflation, that's actually better. And then if you manage to save cash, maybe you can pick up some cheap assets. Maybe you can enter the real estate market if you're not already in it, right? So either way, it's a win-win situation if you're prepared, if you're positioned for this. Now, the sad part of all this is if you look at 70+% of households, they're not ready for a deflation situation because one, they don't have any cash saved up or hardly any cash saved up. When you look at the savings rate, right? Savings rate has plunged and it's near 40, close to 50-year lows right now, right? So most people are not doing good. Hopefully people here on this channel, myself, and you watching, hopefully you're positioned better than most people. I'd like to think that most of us are in the 30% that's, positioned pretty well. Well, let's get into some news because we've got a lot to get into today. And as usual, the stock market still holding up strong. Stocks were actually mixed today. We had the S&P 500 down a fraction of a percent, Dow Jones a fraction in the red, NASDAQ up a fraction. So mixed, but not much of a move. The big mover was the Russell 2000 up over 1% today. Oil coming in at $78.50. Gold still holding well above 2000. We're at 23.48. Silver, I said it was going to dip below 30. Remember I said right here in this channel, when it ran up to over $32, I said, don't chase it. It's going to pull back. And I wouldn't be surprised to see it go down a little bit more just based on the chart patterns that we've seen throughout history. But I do think there's a floor near $29, $30, right? So you could see it drop briefly to 28, 27. Who knows? That may not be the steady floor. There may be a dip below that. But I do think if it does dip below this $29, I don't think it's going to stay there for long. So maybe not a floor, but maybe a trampoline under the floor where if it does go below it, I think it's going to bounce back up very quickly. One way I could think to describe it. 10-year bond yield being suppressed now. We have 4.21%. That is another drop, over 0.5% a drop of the 10-year bond yield. What does that tell you? That tells you that there's an institution out there buying a lot of debt. And this being dollar denominated debt, we know it's likely not foreign countries buying this. We know it's likely the central bank. Because when you look at what foreign countries are doing, a lot of them are dumping dollars and dumping U.S. bonds and treasuries. Look at what China's been doing, right? So we know this is likely, I wouldn't even say likely, this has to be the buyer and lender of last resort. It's the central bank, right? Most of you know this. So let's get into some other news that you may not have heard yet, because I did some digging today. And let's talk about this. We have Wells Fargo out there firing people, and this has to do with the work at home craze. And of course, ever since 2020, a lot of people working at home. Companies found that in many cases it's good because you save office space. What's not good is the banks that loaned out all this money for office buildings, because now they're severely underwater. There's a report that one particular San Francisco office building is being, the value has lost 90%. It was like 60 million. Now it's sold for like 6 million, 6.5 million. And that's just one of the many skyscrapers, office buildings in many different cities. This is happening, but that's one of the worst scenarios that we've seen so far. But yes, a lot of workers went home. Companies realized that for the most part, working at home is pretty rewarding, not just for the employee, but for the company. But one downside is the companies can't really keep an eye on their employees as well as if the employees were in the office, right? Employees working from home, obviously you can't keep an eye on them. So what do? They monitor PC activity. They see, okay, who's typing on their computer, who's not typing, just by looking at the activity and the data usage and stuff like that. But what's happened with Wells Fargo is they found that people were simulating working at home. And this was, I think, a dozen something employees that they fired. And this could be the tip of the iceberg, could be a lot more as they continue to look for this type of activity. But what employees were doing is they were buying mouse simulators that they could plug in the USB port or whatever, and it made it look like they were doing stuff on the computer, right? So maybe it moved the mouse or something every 5 seconds. I don't know exactly the technology, but it was supposed to give the impression that the employee was at their computer doing work. U.S. Bank Wells Fargo fires employees for simulating being at their keyboards. Workers were being sacked after review found they were creating the impression of active work using these devices, and there was this surge in a search for those types of devices after 2020 when a lot of people started working at home. So these employees were found to have basically used these devices, and then who knows what they were doing. Were they out in the backyard picking flowers? Were they sleeping? They weren't at their computers, what was discovered. So Wells Fargo, is fighting back against this, and they're firing people. How many more people now? Is this going to be a snowball? How many more people are going to be fired now that companies are alert to this and are finding out, the simulation of working at home? So pretty interesting. If it wasn't bad enough, we have enough layoffs, and now we have this to add on top of the reasons why companies are getting rid of people. And to make matters worse on this whole thing, it's Wells Fargo. I mean, Wells Fargo was caught doing a lot of bad stuff. What was it, a few years ago? Let me see if I can find it. They were caught creating millions of fake accounts. And here's just one of the headlines. Wells Fargo agrees to pay $3 billion to resolve criminal probe. The settlement holds Wells Fargo accountable for tolerating fraudulent conduct that is remarkable both for its duration and the scope. So, yeah, they got caught creating fake accounts. That was a popular news story back then. Again, here's one from 2023. Phony bank accounts resurfaced at Wells Fargo with the twist. So it looks like they're still doing, some of this stuff here. Wells Fargo fined a dozen people. Okay, that's the recent story that we just talked about. Fake account scandal, again in 2023. Wells Fargo executive avoids prison time, right? And this was millions of accounts, right? If you and I probably would have done something similar to that type of fraud, we probably would be in prison for a long time. But the executive, they don't pay the penalty. In fact, if you read the way they're describing it, they try to make light out of it here. The settlement holds Wells Fargo accountable for tolerating fraudulent conduct, not portraying it or not instigating it, but tolerating it. You see how they put the headlines out there to make things sound less bad than they really are? Something that's pretty interesting is a lot more people are realizing what's going on with the financial system, with the economy, and they're calling out some of the talking heads like Powell and crew for their phony portrayal of the economy. Here's one that I found that I just wanted to play real quick for you here.
In July, so I'm not sure where these job gains are, Powell.
The labor market has come into better balance with continued strong job gains and a low unemployment rate.
Meanwhile, the real data is showing job losses. Unemployment has gone up from 3.7% in January up to 4% in July, so I'm not sure where these job gains are, Powell.
Just one example of the type of reporting that I'm seeing more of now. I'm seeing more of this type of thing on social media, people coming out doing videos about it, which is nice. It's nice to know that people are not just realizing what's going on, but spreading the word. It's really nice to see. And he was talking about just the unemployment rate, which did tick up. But I think even bigger is we need to look at what types of jobs are being created. Remember, most of these are part-time jobs. Those are our last report. We talked about how many more part-time jobs are being added and how full-time jobs are being lost. We showed you a chart on that in the last report. If you didn't see that, check that one out in our previous video. But yeah, mostly part-time jobs. Full-time jobs are declining, and it's even worse because take a look at this. Here's what's another part of the puzzle, another part of the story here. Government employees, this is ever since 2020, the beginning of 2020. Look at the surge in the government employees, right? This is another big part of it. If the government can continue to spend unlimited amounts of money, then they can continue to add jobs. And you think some of these jobs might be padding the jobs numbers? I mean, when you look at the increase in the government employees, of course, right? They're going to do everything they can to make things look better, to put pluses in the jobs category if they can. So of course they're going to find different ways to do it. But it's pretty interesting. At least some good news. I think that more people are talking about it here out on social media, things like that. And some other recent headlines out here that I noticed here: tech, and this is Silicon Valley. Salaries plummet, as well as layoffs in Silicon Valley amid economic uncertainty. So a lot of layoffs and plummeting salaries in Silicon Valley. The thing about it is a lot of these companies are giving bigger bonuses to the people at the very top, to the CEOs, and they're buying back more of their own stock, right? So greed is really helping the people at the very tip top of these companies, but in this case, it's hurting a lot of employees because we see headlines like this: more layoffs are happening. All right, let's shift gears a little bit over to electric vehicles. There's a report that there have been, or is right now, EV vehicle graveyards. And this is reported based off of Tesla. And they're saying that there's graveyards full of unsold Teslas, right? So let's dive into this. And let me just bring up a headline real quick here and a photo. Unsold Teslas pile up in EV graveyard as financial woes deepen for the CEO there. Here's supposedly a bunch of vehicles that are unsold. My question is, would they just let this vehicle sit out there in the elements versus just cutting prices and get them sold, right? Because pretty much anything, if you cut the price low enough, somebody's going to buy it, right? Yes, demand for electric vehicles has dropped off, and many people regret buying an electric vehicle. I think it's close to 46% of people regret buying an electric vehicle. But if you cut the price low enough, people will buy it, right? If you cut the prices in half, I'm sure they could sell a lot of these. So I'm not sure if I fully believe this story, but that's what's being put out there. They're calling it the Tesla graveyard, right? So do you think this is accurate, or could it just be that these are vehicles that got recalled, or who knows? In Victoria alone, some 2,000 Teslas arrive. This is Australia. every month without any buyers, and they're starting to pile up. Right, so this is out of Australia. Some more photos. We know that electric vehicle prices have been cut by especially Tesla. We've seen companies like Rivian laying people off. We know that the demand has dropped, especially now with people so far in debt that people are afraid to take out these big loans. But what do you think about that? Is it the graveyard? Is it the mass? Um, is it Is this a prelude to a collapse for Tesla? Right, that's what they're making it sound like. So I don't know if it's going to be that dire. I think all they have to do really is again cut the prices, and people will ultimately come in and buy these vehicles. Let's talk about what's happening over at the FDIC. FDIC, quote, morale is bad across FDIC. The workforce reports toxic workplace culture, and they recently replaced their head of the FDIC. It's going to be Christy Goldsmith Romero. But why would morale be bad at FDIC? Could it be that they have only about 1% of all the money that's needed to cover the deposits at the banks? So remember, they had to go and they had to team up with the Treasury and the Fed to basically cover all the people that would have lost their money in the failed banks that we saw in 2023, Silicon Bank and others. Could that be why morale is bad? Maybe something else is going on. Lawmakers are casting doubts on FDIC's ability to implement workplace reforms with its chairman. So they want to replace the chairman as well. I think it's more than just who's running it or who's the head, who the chairman is. Sometimes institutions are just unnecessary, and I think people are realizing that why have the FDIC if you're just going to go have the Fed print the money? And I've talked about this before. If you're just going to go have the central bank print the money to bail everybody out anyway, to cover the depositors, or to have another bank come in and buy the assets, and therefore the depositors' money is still safe, why have the FDIC? So I think that's people are starting to question, I think, their own jobs. They're saying, why do we exist? And when you are in a lot of debt, when you have obligations, when you have payments you have to make, when you have bills, and you're working at a job that you start asking yourself, is this job even necessary? How long until I'm laid off? I think many people are asking that. So I think that's what the toxic culture likely is at the FDIC. And actually, I found the article that I was looking for talking about electric vehicles. Yeah, it's actually 46%. 46% of electric vehicle owners want to go back to regular fuel powered vehicles. Pretty interesting, right? So when gas prices are high, and they're still high, they're still kind of not as high as they were, but they're still kind of high. You would think that demand would still be there, but sometimes the downfalls or sometimes the negatives outweigh the positives. And I think a lot of people are starting to come to that conclusion. Beware what your investment goals are. If you're a landlord, you could have something like this happen. Listen to this. Squatters refuse to leave an Airbnb rental in North Carolina, saying the following, quote, if you enter, we will press charges. And you're going to see a lot more of this, especially as the unhoused increase even more. And if prices don't come down and if things don't become more affordable, you're going to see a big increase in this type of thing where people just try to squat in a residence because they'll have no other choice, either that or live on the street under a bridge somewhere, right? So buckle up, folks. Be wary of what investments you get into because it's very risky. Look at what's happening in real estate right now with a lot of landlords. Who knows how this is going to end up, but you're positioned, I'm positioned. Either way, we're going to be ready for it. Hope everybody liked this report. Please let me know what you think down in comments. The Tesla graveyard, the layoffs, the Silicon Valley plunging salaries, even though they're buying back their stock and stock prices are going up. Pretty interesting time, folks. Either way, we're going to be ready for it. Keep stacking, everybody. Bye for now. Happy Father's Day to those good fathers. Good fathers. All right, bye, everybody. Keep stacking. Peace.